In this masterclass, we're going to take a look at fundamental analysis. So in another one of the videos in this series, we previously took a look at the comparison and the differences between technical analysis, mostly the differences between technical analysis and fundamental analysis. We also have various other videos you want to take a look at on technical analysis, but here we're going to take more of a focus in on the fundamental analysis side of looking at markets and trading and investing. So how does it take the form, fundamental analysis? Well, there's kind of four primary areas we're going to take a look at in this video. We're going to look at the macroeconomic data, the various data that affects the economy, any individual economy or the global economy. We're going to take a look at central banks, central bank speakers, central bank meetings. We're going to take a look at geopolitical events, the broader geopolitical events that could potentially impact on markets. And then we're going to take a look at corporate data and corporate events. So first of all, macroeconomic data. So there's various different types of macroeconomic data, whether they affect the global economy, whether they affect smaller domestic economies. So clearly, say for example, the US data is going to have a bigger impact potentially on the global economy than maybe for some smaller national domestic data. However, nevertheless, that smaller national domestic data can influence significantly domestic markets. But there are various tiers of data, whether they are going to be more impactful globally or on a national domestic level, and we're going to look at those various tiers of data. So tier one kind of data includes things like GDP, gross domestic product. It's going to include the employment rate, so the unemployment rate, the participation rate, those kind of pieces of data that come with employment reports. And also we're going to look at maybe inflation. The primary main inflation that we often look at is going to be the consumer price index, also known as CPI. So these are tier one headline grabbing numbers, and they have often significant impacts on across different asset classes, whether it be on currency markets, on equity markets or bond markets, etc. Tier 2 data is slightly going to be less impactful, clearly being in tier 2. So we will be looking at things like maybe purchasing managers index, also known as the PMI. We'll be taking a look at maybe industrial production, manufacturing production, those kind of pieces of data. And then maybe also looking at retail sales, consumer sales. And then we have a third tier of data, which is a lot of stuff falls into this tier, which would include things like housing data, maybe trade data, and various different sentiment surveys. So here we have the weekly ASX 200, and we've had a decent global recovery in here, positive macroeconomic data since 2016 through 2017 through 2018, and that's impacted positively on the ASX 200 through this period. We're now going to look at and talk a little bit about central banks. So the central bank, the main central bank in Australia is the Reserve Bank of Australia. There are also obviously major central banks globally that can have an impact also on global asset classes. So on top of the Reserve Bank of Australia, we would also be potentially looking at the Federal Reserve in the US, and the Federal Reserve decision-making process is done through the Federal Open Market Committee, or the FOMC. And we also have other central banks that may have an impact on both domestic economies, but also the global economy. The ECB in Europe, European Central Bank, the BOE in the UK, the Bank of England, the BOJ in Japan, the Bank of Japan, and the RBNZ, the Reserve National Bank, the Reserve Bank, of New Zealand. So how do central banks affect markets? Well, they set the interest rate, so they make interest rate decisions. They also may be encountering or engaged in, quantitative easing. They may put out meeting statements or meeting minutes that can have impacts on various asset classes. And then central bank members also perform speeches. They may be hawkish or dovish, and we're going to talk a little bit about that shortly. And whether they're hawkish or dovish, that can also impact on the markets. So what does hawkish and dovish mean from central bankers? Or a hawkish tone would be a hawk in a central bank would be someone who's more concerned on inflationary forces, and in turn that means they would likely be more favouring higher interest rates. Dovish, on the other hand, would be less concerned on inflationary forces. They'd be more concerned with growth and employment, and then in turn that would mean they would probably favour a lower interest rate environment. So here we have a more recent, okay, at the time of recording this video, August 2018, we had the Reserve Bank of Australia meeting. They were slightly more hawkish than the market as anticipated, and that in turn saw this spike higher in the Australian US dollar FX rate. Let's talk a little bit now about geopolitical events. These can include things like the acts of God, so earthquakes, hurricanes. It could include politics, so elections in any domestic situation, and then bigger things maybe that could impact maybe into global markets, like the recent Brexit vote. We also have geopolitical risk coming from wars, terrorism, conflicts, and those conflicts don't have to be of that type. They could be trade wars, as is kind of developing throughout 2018. So here we have an example of the trade war concerns that developed through the summer of 2018, June, July and into August, and a sell-off in the price of copper because of concerns around trade wars. Finally, we're going to look at the corporate data and corporate events. So we can have earnings reports coming out from individual equities that clearly impact on individual equity markets. We can have the earnings reports can include things like the net income, the profit margin, debt to equity ratios, and price to earning ratios. We could also have mergers and takeovers that can impact on various corporate, individual corporates and individual equities. So in here we had a recent announcement of a deal between Amcor and Bemis, and that saw a significant move lower in the share price of Amcor. So to recap in here, in this masterclass, we've taken a look at an introduction really to fundamental analysis. That would include the analysis of macroeconomic data, the impact from central banks, the impact from geopolitical events, and on an individual stock basis, corporate data and corporate events. This has been Steve Miley for The Bull, and please do join us again on thebull.com.au and thebull.asia. Stay bullish.